if we would be looking at, let's say, this day right here, what about the volume signature? Did demand come in? For sure. What did the price do? The price did kind of the same thing, right? So strong close. We're intruding into the previous significant bar to the downside. There are some differences, obviously, between 1 and 2. But the idea of the close is kind of the same. And it's logical where it comes. First, we have a selling climax support, and this is where demand comes in, right? So the price touches that support and starts rallying. Why would it do so? Well, that particular place in the structure is defined by the selling climax stop in action. And what did happen on the selling climax stop in action? Demand was plenty, right? Why is it called stop in action? Well, because demand is coming in, it absorbs the supply, at least temporarily, and that stops the movement of the price down. And therefore, this either produces some kind of local event or that produces a whole trading range, depending on the magnitude of that demand that came in. In this case, at the selling climax, demand was extremely strong and it produced a whole trading range. And that's what selling climax events do. But so do springs or spring events. This is the second highest demand signature after the selling climax. So this area right here, this support is extremely important. And what do we see as the price approaches this support? The same thing. Demand comes in as it was at 1, and there is a temporary lift. Now, we're still yet to see, and I'm going to show you an example here of the scenario where we could have the rally from here. But I'm also going to kind of emphasize to you what our attention should be on. Because sometimes what I see with students and traders, and I've done this myself, and sometimes I do this as well, it's just a matter of repetitions, okay? Is that we look at the leaves and we do not look at the whole tree. We do not look at the branches. We do not look at the big branches. You know, those big branches are trends, right? Or the biases. The whole tree is just, you know, the structure of the whole market. You know, and then there are some trends, biases that, you know, are so important. You always measure the result against the bias. And you could do so on multiple time frames. So I could say that I'm measuring the current result against the last bar of importance. What was the last bar of importance? Well, to the downside, just because we have a bearish bias. So therefore, this area right here of around, you know, 42, 42.50, or like 42, 43, this needs to be overcome. Then the next level will be this bar.